right, today I have my head of sales over the Clint Gronbeck. He's in charge of everything sales related within our firm. He is the guy that has his ear to the ground, who engages with our buyers and our sellers. And I thought that we would give a little bit of a market update to let everybody know what's happening out in the market. All right, so how's it, Clint?
Great.
So tell me what's happening out in the commercial industry at the moment. Like, where are the sales? Where's the action? Where's it happening at the moment?
So look, Greg, commercial is still quite dead. It's quite soft at the moment. The market hasn't fully recovered post-pandemic.
So when you say commercial, it's office space?
Office space, yeah. That's correct. But we are noticing a very nice uptick on the industrial side of things. And in terms of a range, probably around the 500 to 1,000 square meter mark.
Okay.
We're getting some good traction on that.
So mini warehouses, that's people are still interested in buying mini warehouses.
100% right, in key industrial nodes, specifically around Joburg North and Joburg East.
Joburg North being what, Honeydew, Fourways?
More around Sandton.
Sandton?
Falling into the Midrand side as we go up towards Centurion, Pretoria. Okay. We're getting some good traction on that. As far as the east is concerned, Limbrook Park, moving out more east.
We've definitely seen on our side with the leasing, all of the action has been on the commercial side. In terms of office space, I mean the industrial side. Sorry, in terms of office space, it's been quite soft. Companies seem to slowly be coming back to the office, but your bigger corporates, your global type companies, a bit more hesitant, I think, because of global policies and all of that. But your smaller businesses are certainly coming back. Not really to buy, I don't think, more to lease, more testing the waters to see what's happening. And you know, your sort of 200 to 400 square meter range is where the action is there. But certainly industrial is absolutely flying at the moment. I think in terms of investments, owning anything industrial at this point, catering to the sort of last mile of logistics, and then also the big logistics DCs in that. We're actually battling for stock at the moment.
And on the leasing side, just on that, what industries are you noticing on the forefront of change in terms of property movement?
Well, again, you know, it's back to that last mile. You know, when we look at the way consumers are behaving at the moment, everything is online. It's instant gratification. Guys want their goods. You want to order it now, and you want it on your desk tomorrow when you get into the office. So we're seeing a lot of the smaller industrial side, small warehouses.
For sure.
Close to the very busy nodes. So Stratham Park, for instance, is very sort of centralized when it comes to distributing goods throughout Randburg, Honeydew, Fourways, and all of that. And then the same things happening in Midrand, where the vacancy factor is very low because of that. That's where we're seeing it. The businesses want to be close to their customers, and the closer they can get to them, the better. And we're seeing it in the market.
I certainly agree in terms of the vacancy factors, right? Because what we're noticing on the sales side is that there's quite a nice uptick in development proposals that are going out now to our various clients. And the reason for that is because key nodes that they want to be in that might not have stock available at that time gives them an opportunity to maybe explore something where they could maybe pay a bit of an extra premium, whatever the case may be, get a property built to their specifications in an area that they want, providing that there is land available, of course.
And what size range is actually quite busy at the moment?
On the development side, massive shortage at the moment in terms of the normal sale stock, 3,000 to 6,000 squares. And that's where developments are getting quite nice uptick on. There's nothing available out there in those sizes.
I mean, we're finding in Midrand, for instance, that we hardly have any industrial stock, and there is a huge demand for the size range, sort of 400 to 600 to 1,000 mini warehouses. But what we're also finding is that the role players, the developers who would build, who are able to build units like that just don't really have the appetite for it. You know, they'd rather build the 10,000 square meter boxes and have one tenant to manage instead of managing, you know, 10,000 square meter tenants. So it's interesting, you know. I think as well the smaller developers that would look at building those size units probably are a bit hesitant at the moment to put their hands in their pockets and break ground because of what's happening in the market, you know, in terms of the macro market, you know, hyperinflation coming through, the cost of building. It's a hell of a risk to take, although we see it on the coal face, and you know, the risk probably is lesser extent to building, I would say, residential or commercial office space.
And I mean, that's also a knock-on effect from what the banks are doing at the moment. I mean, banks are now scaling back in terms of offering out loans.
Absolutely.
Post-COVID, there was a small window where they were quite bullish, especially on the residential side. But now they've scaled back a bit with the US currently in a technical recession, with Europe that's going into very dark waters at the moment with their load shedding that's now going to be starting soon.
Yeah, they're going to get load shedding
as well as a war on their pavements. You know, it causes all kinds of uncertainty in the market, and it does have an effect on our market right here in South Africa.
Well, I think the biggest thing is the cost of living. You know, I mean, I don't need to tell you. My Woolies trolley has gone from you know, R2.50 to 30 Rand. You know, in the course of a year. You know, and the banks know that, and the banks know that the affordability of your consumer is much less than what it was a year ago or 2 years ago. And you know, I think, you know, fair play to them. Let them play safe, but it doesn't help with what the market actually wants at the moment. You know, unfortunately, the banks just paint everybody with the same brush, and where you have a very qualified buyer or developer may not have access to that type of finance as easy as they used to.
Of course.
But at the same time, I mean, you know, there's some other boutique finance players that are sitting on the sidelines waiting to sell their money.
I was just about to say that to you. There's a solution in the market. Rates are a little bit higher, but they're out there. And obviously, as one industry spawns out of the next industry, we're noticing a massive influx now on boutique financiers coming in, and they're picking up the scraps in the market. And
certainly, you know, I think that they're filling a need for that bridging type finance. When I say bridging, you know, a year, 18 months timeline, you know, get in and out to get developments up. Yes, you pay a higher rate at the beginning, your cost of capital is higher, but after that you refinance with one of the retail banks and back up. So that's one of the strategies we are seeing out there. But you know, as a whole, I think the South African market is quite resilient. I see that they're fighting. You know, guys still need to put food on the table. They still need to run their businesses. And we, you know, and we're seeing the creative ways that they are trying to keep head above water.
Well, it gives me optimism because just from this quick chat, there is actually movement in the market, and we just have to be wherever the movement is. Yeah,
absolutely. I mean, just with our business being, you know, the strategies that we employed, you know, 5 years ago, even 2 years ago. Around business development would change, you know, as the market change. We have to change. It's no longer about putting as many boards as you can up on a building and making a building look like a Christmas tree, because that, you know, that ultimately devalues. You know, the perception is that the sellers or the landlords are desperate, and that, you know, then your clients come, your occupiers come and go, well, why should I pay? I mean, you've got 100 brokers with boards up on the building. What's the point? You know, like, I'm gonna give you a ridiculous offer. You know, some guys are starting on the back foot. So we, you know, we try and advise our as much as we can our landlords against that. And then our teams, as you know, we go directly. You know, we go directly to our occupiers. We speak to them directly. We don't just spray and pray. But we've had to change. You know, the strategy was different. The strategy was different 3-5 years ago. You know, and this is where we are now.
I think it's important what you just said now. You know, if we as a company had to stay exactly where we were, just doing the exact same things pre-COVID, you know, we'd have to close doors. So I think the resilience in the market just has a rub-off effect on us because we're able to adapt to those changes and keep the lights on.
Yeah, that's what it's about now, keeping the lights on. You know, we found here at our office space in Bryanston where we are, we have to pay extra 15% on top of our rent for the cost of the diesel.
For the generator.
For the genny that kicks in, you know, twice, 3-4 times a day. And that's going to have a, you know, that's not just us, that's everyone else that has a genny. The cost of that certainly is not as high as the cost of lost productivity. So we're forced to take that extra expense, you know. So yeah, you know, like we just have to fight. We just have to fight. But I do think that our occupiers are looking for more affordable space. Certainly in the commercial side, on the office space side, we're finding a lot of action on the more affordable nodes. You know, guys are moving out of places like Melrose Arch and that because, you know, to pay 200 Rand a square is just ridiculous. You know, where they could go to Rivonia and pay 80 Rand a square. I mean, that's a hell of a difference, you know. So yeah, there are challenging times ahead, I think, for the commercial landlords out there.
But as far as commercial is concerned, and just on your point, right, what we're noticing on the sales side is that we have a lot of commercial investors who are now picking up buildings which are just sub-occupied, fully occupied. They get those buildings at an excellent price, want to maximize the upside on that, and they're smiling at the moment though. So although the commercial space is still in recovery mode, on the investment side of things, guys are out there, you know.
Yeah, I think that the commercial property landlords, specifically office space, are reaching their max pain points. And what I mean by that is, you know, the cost of running the business, the building being a business, is becoming too high as the tenants have moved out. So now it's not a case of you bring me an offer and I will consider it. I'm not really a seller. No, I am really a genuine seller. And it's like any investment strategy, you buy low and you sell high, you know. So I think there are smart investors out there that realize that there's some really good deals to be had at the moment. Obviously a bit of a risk because we don't know how long it's going to take to come out of this. But after 5 years, I think they'll be smiling. It really comes down to the income on the property, you know, and if a landlord can carry it through the stormy waters, then they're going to make money. Then they're golden. I remember a time when nobody wanted to buy retail. Now we have calls every week.
Almost every day.
Every day.
Yeah.
Guys looking for retail. You know.
That's right.
It's the flavor of the month at the moment. The flavor of the year, but. You know, what's going to happen with this hyperinflation that's happening? Are retailers going to be able to still be competitive as stores go online? Is your brick and mortar store still going to be competitive? So maybe retail won't be as popular. Retail property. It may not be popular down the line.